Well, what's up, everybody? Welcome back to Trading Wars. So today, as requested on Twitter, we're going to be doing the intraday version of fib trading and how you can apply it in a day trading context. So if you're ready, let's step into the war zone. All right. So the first thing, I want to do a quick refresher on what fibs are, in case you've missed it. So fibs are impulsive retracements. So what a fib is, it's a retracement of a move with the expectation of continuation or with the expectation that the fib levels will be support. And instead of drawing it out here, I'm going to go to the charts to show you guys how that works. So I'm going to start with the chart on Friday, and we're going to talk about the psychology of everything. So right off the open, within the first 15 to 20 minutes, there's going to be fib plays, especially when you have a big candle. So this big red candle at the open shows that there's some selling pressure as well as some buying pressure with this wick. So how do we use the fibs to give us good entries in order to day trade? Well, what we do is whenever we have a big impulsive move, so a huge candle is an impulsive move, we take the fib from the low to the high or from the high to the low, it doesn't matter, whichever direction you want to go. And we're going to look at these fib levels to act as support and resistance, right? So if you were short bias with this first bar, you can see that the 618 and the 786, this zone was the next level of resistance. So this happens every day in the market. In the first 15 to 20 minutes, there's going to be a battle for micro fibs. There's going to be a battle on a lower time frame. So if we zoom down to a 1 minute or 2 minute chart, you can see this more in detail, right? Or if you go down even lower. So what the shorts are trying to accomplish here is they want to get a good fill on this bar and have a stop in a safe place. So they could have shorted at the 618 with a stop above the swing high, or short in the midpoint with a stop above. And what they're looking for is the extensions of the Fibonacci for profit targets. And as you can see, this market touches the 0.5 extension of the short, and then it just rallies. So this right here proves that fibs are always in play and in trading because algorithms dominate the markets these days. Why would we have these bounces, look, at 382? Why would we have these bounces at the 50 if there weren't bots trading these algorithms? And look at how beautiful the risk to reward on this trade is. If we were to short somewhere over here at between the 618 and 786, and we were to risk off of the swing high, that's an easy 3 to 1, 3.3 to 1, which is amazing profits, right? So what I like to do at the open is determine, what direction does this market want to go in, and then draw the fibs from there. So we had a nice big red bar showing we wanted to go lower. We had the pullback to the 786, and then we had the continuation down. And now on the opposing side, once we have about the first 2 to 3 hours done in the day, what we can do is we can look at the macro fib on the day. What's the bigger picture setup? So the bigger picture setup on Friday was, by the time we got over to 1245, we had just continued to rally and break through the high of the day. And anytime that happens, we have this impulsive leg, and we could draw our fibs as areas of support. So let's draw the impulsive leg. This is the impulsive leg up. So what are we going to do? We're going to draw the fib from low. So let me get rid of the arrow and draw the fib from low to high, like so. And let me make sure that everything's lined up there for you guys. Boom. So look at this, guys. I want someone to explain to me, if fibs don't work, then why does this market touch the 618 and just explode? And look where we find reversal. Exactly at the 618 extension. I hope you guys can see this and understand, because a lot of times when I mention fibs, people don't take it seriously. But this is the perfect example of how fibs dominate and rule this market. So the bots have this impulsive leg drawn. They've calculated it and they want to buy the dip, and they buy the dip at these fib levels. So the 50, the 618, the 786. In this case, the entries on the 618, we could have put our stop below the swing low, like so, right? Or if you were aggressive, we could have put it below the 786. And then we take profits at the extension. And look how beautiful that trade is. 4.7 R. It's insane. And this is why I wanted to do this video for you guys today on intraday fibs, because it's real. We don't need no hocus pocus, volume, order flow, graphs, blah, blah, blah. We just need the basics. The basics is read the price action. Market wants to go down, fib retracement, extension. Market wants to go up, fib retracement, extension. Okay, so I'm going to do one more example for you guys, and then I'm going to end this video just because in the interest of time. All right, so let's look at the Thursday. Okay, so what happened on Thursday? So if you look at this first 15 minutes right here, and you probably think, you know what, if I shorted, I would have lost. This is a loser. But if you really take your time to analyze the fibs, there was a beautiful fib that played out. Again, first 5-minute bar, red candle, market wants to go lower. What do? We draw the fib from the low to the high. Look at this. Look at this magic. Tags the 618, trades to the 272 extension. Done. That's it. Your trade is done. So how do you play this? Put the short position on at the 618, risk off of the swing high here, cover at the 272, done. Look at that. Done trading within 10 minutes. How beautiful is that? All right. So I don't want the video to go on too long because I know that, you know, you guys don't really like longer videos. So I'm going to be doing a Zoom webinar to go in more detail about some more of these setups for you guys on Twitter. If you're not on Twitter, please guys follow me. And, you know, I post a lot of, you know, good information. I try to do my best to help the community because I was once a struggling trader that lost all my money as well. So, you know, it's my obligation to come back and help you guys out. And that's the honest truth. All right. So recap, we have a micro fib that's playing out within the first 15 minutes to half an hour. We have the macro fib, which is the bigger picture. The opposing fibs are essentially every fib has the other side as well. So if we're shorting here, there's going to be a long fib. There's always a battle. That's why my channel is called Trading Wars. There's always a battle. And I have many other videos on the fibs on my channel for you guys to check out if you want some more information. So I wanted to give you guys real examples of what happened last week to show you how this thing works. All right. So thank you. And please comment, like, subscribe, show me some love. Nobody on Twitter, nobody in the FinTwit community gives this kind of content for free, guys. So please show me some love and appreciation, and we'll continue to have a great year. All right. Thank you and enjoy your weekend.